Hello and welcome to another edition of Capital Market Live on Channels Television. I'm Will Ibon here in Lagos. First, let's check in on the markets. We start with Europe, where stocks closed lower after another volatile session on Friday, wrapping up a tumultuous week following the discovery of the new Omicron COVID-19 variant. The FTSE 100 fell by 0.1%. The German DAX declined by 0.61%, while the French CAC 40 dropped 0.44% lower to close on Friday. With the outbreak of the Omicron COVID-19 variant, numerous countries are tightening restrictions on travel and leisure in an attempt to curb the spread of the virus, with Germany even barring its unvaccinated population from all non-essential businesses. Meanwhile, Eurozone consumer price inflation in November hit a record high 4.9% annually in November. Data showed this week, while producer prices surged 5.4% in October for a 21.9% year-on-year climb. However, CPI inflation is expected to stay above the ECB's 2% target in 2022. Now, over to Asia, where Asia-Pacific stocks were mixed on Friday following days of turbulent trading this week as investors continue to monitor the situation surrounding the Omicron COVID variant. Chinese tech stocks in Hong Kong plunged after ride-hailing giant Didi announced Friday that it will begin taking steps to delist from the New York Stock Exchange less than 6 months after it made its debut stateside. The company also said in a statement that it will pursue a listing in Hong Kong. The Hong Kong's broader Hang Seng Index ended the trading day about 0.1% lower, while mainland Chinese stocks closed higher, with the Shanghai Composite rising 0.94%. And in Japan, the Nikkei 225 closed 1% higher to finish the trading day. Now to the U.S. markets, where stocks dropped on Friday after a disappointing November jobs report as the markets wrapped up a roller coaster week driven by COVID Omicron variant concerns. The Dow Jones Industrial Average fell 0.17%, dragged down by 1.9% loss in Boeing. The S&P 500 dropped 0.84%, while the technology-focused Nasdaq Composite dipped about 1.9%. The major averages posted a losing week. November's job report showed slower than expected job creation last month. Non-farm payrolls increased by just 210,000 for the month, well below the 573,000 jobs predicted by economists. However, the unemployment rate fell sharply to 4.2%, better than estimates of 4.5%. Now, despite a rebound on Thursday that saw the Dow rise more than 600 points, the 30-stock average dropped 0.9% for the week. The S&P 500 fell 1.2%, and the Nasdaq Composite lost 2.6% this week. Now, back home, the bears dictated proceedings in the local equities market as profit-taking activities dominated market performance. The all-share index recorded declines on all the trading days of the week, declining by 2.63% week-on-week to close at 42,167.91 points. And notably, sell-offs of large caps such as MTN Nigeria, Zenith Bank, GTCO, Seplat, and Tambik drove the weekly loss. Also this week, activity levels were weaker as trading volumes and value decreased by 62.8% and 43.9% each week on week. Similarly, the performance across the sectors were broadly negative as all key indexes except for the insurance index recorded declines. NEM Insurance topped the gainers chart for this week. Its share price rose by 18.42%, while UPDC PLC, down by 24.43%, led the laggards. The trio of FBN Holdings, GTCO, and Access Bank contributed 36.82% and 37.9% to the total volume and value of shares traded in the week. Now, meanwhile, activities at the unlisted securities market closed positive this week as both the NASD index and market cap increased slightly by 0.07%. At the same time, the NASD investors gained 44 million naira and the market capitalization closed at 615.86 billion naira this week. Now, total volume of securities traded jumped by more than 800% to 23.36 million units of shares traded, while value also rose by about more than 40% to 84.05 million naira and executed in just 30 deals. Food Concept and Friesland Campina Wamco topped this week's trade by volume, while UBN Properties PLC occupied the top spot on the gainers chart. Meanwhile, stocks of Food Concepts PLC and Mixter Real Estate declined to close the week. Now to the fixed income market, where the local bond market traded sideways this week with minimal volumes traded across board. At the close of trading on Friday, the bulls dominated the market with sell pressure across board. Overall, average benchmark yields closed at 8%, indicating a week-on-week decline of 1.94%. Now at the Treasury bills market, started the week on a quiet note with minimal volumes traded across board, but activity picked up later at the end of the week as investors took advantage of the higher yields at the close of trading on Friday. The market was bullish with selling interest seen across all maturities. Average benchmark yields for the Treasury bills fell by 7.09%, while yields on the OMO bills and the CBN special bills fell by 0.34% and 4.55% each. Now, to discuss the latest happenings in the capital market, I have joining me Mr. Tajuddin Olayinka, investment banker and stockbroker, as well as the CEO of Wyoming Capital and Partners. Welcome, and thank you for joining us on the program, Mr. Tajuddin.
Thank you.
Now, the equities market had a choppy session in November and took off to a rocky start in December. We noticed that the index dropped significantly, now is way below the 43,000 level, with MTN topping the losers chart on Wednesday, December the 1st. And that's the very first day it opened its digital application list for retail investors' participation. Now, is the market angry?
Okay, thank you for having me. I would say that the market was not really hungry. It's just that when we have a situation where you have a big cap stock, coming to the market to actually do something novel, you tend to see that kind of reaction. I think the reaction came from the fact that more investors focus their attention on what MTN is trying to do at this time, and then trying to see what best they can make out of it. So I think the market is more excited. And that excitement has also brought in, those usual up and down that you see in the market, with people trying to take profit, take profit from their existing holders of MTN to be able to enter the primary offer. So it's just it's like some investors trying to shift their position. That's what is happening. It's not that the market is angry, but generally, market was bearish for that reason, and so market is just excited with the offer from the MTN, and generally, of course, we have seen other stocks, banking stock particularly, also moving down in that direction. So it's just a general excitement in the market.
Okay, now, Mr. Tajuddin, you said the market is not angry, but I'm already starting the countdown to, I already started the countdown to the 45,000. When would the all-share index will reach the 45,000 level? But it doesn't seem to be happening anytime soon with what we're seeing in the market. What's your expectation next week? Should investors expect bearish sentiments to continue next week? And what triggers could possibly turn the tide for equities?
Okay. Next week will be a bit better than what we have seen now, because what happened last week, I mean the week that has just ended, it's just something to show that there is more to get from the market for those who understand the market and for those who seek proper advice. So next week we are likely to see more of a balanced market, because prices have actually moved below what they should be. There's nothing wrong with the market. There is nothing wrong with the company that is doing offer for sale. There is nothing wrong with the entire structure of the market, except that when market is in the way that we have it today, you tend to see some kind of unusual happenings. But next week, we will likely to see market correction. Market will correct itself, and as we prepare for the year end, we will also begin to see those who begin to do bargain hunting and cherry picking. So we will see much of a better market next week, because now that even the stock that caused the pull down of the market is also trading. I mean, the offer is the market price is below the offer price. So you see, I mean, the offer is below the primary market offer price. So you will likely see some adjustment along the line, because what is happening is abnormal.
Now, speaking of abnormalities,
so probably see a better market next week.
Okay, we're hoping to see a better market next week, and we're hoping for triggers, positive triggers to, push the market to the territory we're looking for. But what do you make of the Maiden NGX Capital Market Conference, which just happened earlier this week? Would you consider that a positive trigger for the markets?
Yes, I see it as a positive trigger. It was an important event, and it happened at the right time. If you look at the caliber of people that showed up at that conference, we saw the vice president there. We saw the speaker of House of Reps fully represented by himself. We also saw the Senate president represented by the chairman of House Committee, that was Senator Ibikunle Amusu. We saw the chairman of House Committee on Capital Market also. It was an evidence of interest in the market, interest about what can shape the future of the economy, because everybody there was interested in how we can move the economy forward, and they saw that market was an important component in moving the economy forward. So with the way the vice president spoke there, with the assurance we got from these key government officials, including governors that were there, the chairman of governor was there. There were other governors there too. So I think we are going to see a brighter future for the market. They actually gave that assurance.
So are we looking at, what are we looking at in the market? We're looking forward to a more robust capital market in Nigeria with the outcome of this conference?
Oh, yes. If the vice president spoke at length, and the way, he was not even looking at any, so there was no prepared speech for him. He spoke his mind. He himself, it was as if he had an affair with the market. So he spoke his mind. And the way he spoke, and the way every other important personality spoke in that market, and the panel of discussion, I'm beginning to think that we might see some minor adjustment in the structure of the market itself, because the chairman of governors forum complained about their difficulty in assessing the market the same way federal government assesses the fixed income market, particularly the debt market. So they are trying to say, okay, why don't we also have this kind of seamless access to the market, so that we can raise money seamlessly and have it during the tenure of current administration. So all these things are things that the market will be looking at, more or less asking for ministerial exemption order on the issuance of national security. So some of these things will come into play next year, and I believe the market regulators and the NGX will also look at all these things and put a better structure for the market. I know that with what we saw at that conference, with the speaker there, the vice president particularly, I'm quite sure that we'll see a better market next year.
Now, speaking of the vice president,
more robust market that will deliver capital formation.
Mr. Tajudeen, speaking of the vice president, we saw that during that conference, the vice president commended the adoption of the fintech, for capital market operations. And he also hoped that the NNPC would list on the exchange as in line with the Petroleum Industry Act. The timeline of the, outlined in the Petroleum Industry Act. Do you think that is going to happen? Do you see that happening?
It's going to happen. Let me also say this. The vice president didn't just come there.
Oh, I think we have a bit of a connection problem with Mr. Tajudeen there. Mr. Tajudeen, can you hear me? Okay, then we just move on to. We're just going to take a quick break now. When we come back, we will continue this conversation with Mr. Tajudeen on capital markets. Do stay with us. Hello and welcome back. If you're just joining us, you're watching Capital Market Live on Channels Television, where we're talking about the happenings in the capital market this week. Now, this week also, MTN Group offered part of its holdings in Nigerian subsidiary MTN Nigeria to invest in public with specific focus on a wider retail investor participation and ownership of MTN Nigeria. Now, we still have Mr. Tajuddin on the line here to talk to us. Mr. Tajuddin, what do you make of this current situation, this current development with MTN Group?
Okay, it's also a good thing. I'm glad that MTN is finally coming to the market to, to excite the market, to excite investors, and to create more awareness about the markets, especially now that they are doing, digital. I mean, it's more of a digitized offer. So it's a good thing for the market. More so, they are focused on retail investors. And so once you have retail investors coming to that space to also trade stocks and, of course, be part of the market, it's going to be a good thing for the market. And I'm glad that they have actually responded to what government had wanted them to do right from the date, immemorial. Government has always been saying MTN must get listed on an exchange, the same way they want NNPC to be listed on an exchange. So it's going to give a bigger market for the Nigerian market. The same way we are getting that from also NNPC. It's a good one.
Okay, so we see that the MTN's current offer is the first digitized public offering in the Nigerian capital market. Now, this is huge, by the NGX exchange. Now, where does this place the market?
Yes, it brings confidence back to the market. It increases acceleration of the offerings in the market. In other words, you can even have an offer that will open for just 1 week. You may even have an offer that will open just for 3 days. It's a gradual process. We'll get there. With this starting point from MTN, it's going to create more awareness because we have been receiving calls from investors out there, even those who have not played the market before, to say, okay, they have heard about this MTN offer. How can they come in? So all these things will create more awareness about the market, and of course, will create a wider reach, not only for retail investors, even institutional investors. And we will have a situation where we just have offer open for just 3 days, or even maximum 2 weeks, as we currently have, and it's going to be a successful offer.
Now, Mr. Tajuddin, it's a good thing you mentioned MTN share price, offering this, making this public offer. But meanwhile, the share price dropped significantly during the week. That really dragged the all-share index, and that's following the announcement of the public offer. And it has been trading subpar to close this week. What's going on with this stock at the moment? Mr. Tajuddin, can you hear me? I think we have lost Mr. Tajuddin again. Mr. Tajuddin, are you there? Okay, so basically, okay, Mr. Tajuddin, we saw that the share price, MTN's share price, dropped significantly. It dropped about 10% on December the 1st, and subsequently we've been seeing drops in the markets after the announcement of the public offer. What is going on with that stock, the existing stock of MTN?
Okay, it's nothing unusual. It's what we are seeing here is a market that is trying to correct itself, because you have an offer that is now trading at below the market price. I mean, sorry, at above the market price. Once the market price is below the offer price, the offer price of course, the investors now begin to show interest there. I know that there have also been some reasons why we are having that, especially because of the fact that that stock was not on suspension. In the past, we used to have the share price of a stock that's on offer, put on suspension, put on technical suspension, that it won't move during the period of offer, so that anyone who wanted it will have to wait, either pick it at the fixed price or come back when the suspension is lifted. But now we are not having that, and that is the challenge. But I think the NGX and the SEC that check itself did not begin to look at the rules that will tighten this particular bad behavior on the market, because what is happening is that some people are actually playing the market in the negative side, just to make those existing investors fair to them sell to them at lower price so that they can hold those stocks and come back to sell at higher price. So all these things also happen in the market.
Mr. Tajudeen,
once we can have the rules on negotiated deals that we already have, so that the share price can be voting for the period of offer. So that is where I expect EC and NSC and NGX to now begin to reflect, so that you can have a better offer going forward.
Do you think that? Do you think
it's not a buy that it's not that people are putting pressure on the market?
Mr. Tajudeen, do you think that the incentive of one free share for every 20 shares of MTN purchase is the contributing factor to what we're seeing now? Now, how does this affect existing shareholders? We're already seeing the impact already, but what is their position in this free ride arrangement? How do they benefit?
Okay, I think somehow there's a misunderstanding there. The free share, the one share per 20 units of new offer is coming from the NGX. It's coming from MTN Group. That's the core investor in MTN that is opening its own part of the shares for sale to at least increase the float in the market and help investors. Retail investors take advantage of what they are doing. So basically, I think it's something. How do I put it? I think it's not something that we should lose focus about. The free shares is coming from the company, that is the core investor that is opening its own for sale. It's not coming from MTN Nigeria as a company, because the existing shareholders will only benefit from the fact that these new shares, for those of them who can afford to hold for 1 year. Once you can afford to hold the new shares for 20 months, for 12 months, you benefit and you have that one free share. You won't get it if you cannot hold it. So it's a way to say, okay, we want those who are looking at future, those who want to have this stock as their pension stock, to come into this space. So basically, I think the existing investors will benefit from the fact that the float will be better managed. I don't think they should continue to entertain fear or panic. What is happening is a panic pressure from some kind of market gamers, people who are playing game in the market. So they should, it's a speculative attack on the market. Not the same way you have to contest.
I know we shouldn't panic, Mr. Tajudeen. Mr. Tajudeen, I know we shouldn't panic or have fear, like you said, but there are concerns out there that the offer could be a ground for possible exit of MTN from the Nigerian market in the nearest future, even though the group president of MTN, Ralph Mupita, already dismissed this fear. Well, how do you react to this? How do you react to this, Mr. Tajudeen?
Well, maybe it was also part of the reason people especially panic on themselves. The investors need not to panic at all. Let's look at it from two perspectives. MTN remaining in Nigeria and MTN moving out of Nigeria. Either way, Nigeria benefits. So the fact that the group MD, that's the group MD of MTN, has said there's no reason for that. Nigeria market is the biggest market for them. Nobody will want to leave Nigeria market, and I think the reason they are bringing other investors into the fold is to say, okay, we have come here to stay. Even if they choose to leave, Nigerians benefit more, because whoever is going to take over from them will have a better company, a cash cow, and something. And don't forget, MTN has is the number one company, number one listed company in Nigeria in terms of turnover. No company has ever reached that level. Not even the cement companies. So, even if they leave Nigeria, Nigerians benefit.
Mr.
If
Tajudeen,
they remain in Nigeria, Nigerians benefit.
Also,
it's a win-win situation for Nigerians.
Okay, Mr. Tajudeen, I just want to bring up what happened during the week as well. Airtel Africa announced that they completed the buyback, completion of the minority shareholding of its subsidiary, Airtel Africa. Airtel Nigeria, which is about 61 billion naira for the 8.27% minority shareholdings acquired under the share buyback plan. Now, what do you make of this? How do you think that the market how does this impact the market?
Okay, I think only few companies, few investors were part of that deal, and companies like Postbank, like some insurance companies that invested in Airtel Nigeria will have benefited. And so what that means is that they will now be in good cash to be able to also invest in other areas, even come back to invest in Airtel Africa. Now, what Airtel Africa has done is to say, okay, I have a bigger pie. the Airtel Nigeria is a smaller pie to us. Let's look at that bigger pie that you can benefit more. So invest in Airtel Africa. So they will take them out, give cash to them, and make it possible for them to re-enter Airtel Africa as as an investment if they still want to want to remain there. And I believe many of them will still go back to Airtel Africa, and that may also push up the share price of Airtel Africa. Besides that, you also see it's an opportunity for them. It's an opportunity of cash inflow for some of these companies, and it's good for them at this time. So, but for the MTN is looking at bringing more retail investors, selling his own there and making his Nigerian company a better company in Nigeria. Whereas Airtel is just say, okay, I'm an African person. Come and stay with me. So both of them are doing something that is fantastic, and we should commend the two telco companies.
Many thanks, Mr. Tajuddin Olayinka, CEO, Wyoming Capital and Partners. Many thanks again for joining us on this program this evening. Thank you so much.
Thank you.
And now that's a wrap on capital markets this evening. Don't forget to join us next week, same time. I'm Will Ibang, and thanks for watching.